Welcome to today's webinar, How PEOs Help Small Businesses Face Today's Challenges. My name is Gary Dehart, and I'm the publisher of Insightful Accountant and host of today's webinar. This webinar does qualify for CPE. Greg, if you could roll down to the next screen. A couple of things on the housekeeping side. It does qualify. You must be present for at least 50 minutes, 50 minutes. You must participate in at least 3 of the poll questions. And if you meet this criteria, your certificate will be emailed to you within 24 hours. The replay for this will be placed on our YouTube channel. I will add that link to the chat once I turn this over to Greg. The slide deck will also be placed in the chat, and the slide deck and the link will both be emailed to you within 24 hours. And again, if you meet the criteria for CPE, you will also receive that certificate within 24 hours. So our speaker today is Greg Usberti, Senior Director of Deal Strategy at ADP, and in this role, he provides strategic solution design and sales support for hundreds of sales professionals at ADP. Greg has been with ADP for 9 years, but brings a combined 26 years of business-to-business strategy experience in compliance, data security, and telecom. He's been an expert voice across internal channels as well as external partners, from accountants to private equity firms, trade groups, and broker partners. And thank you all for joining us. And thank you, Greg, for sharing your knowledge with attendees today. And thank you for ADP for just making this webinar possible. So with that, Greg, I will turn it over to you.
Thank you much for the introduction. Really appreciate having the opportunity to speak to everybody and talk to everybody today. My goal is to ultimately provide you with an overview of what PEO is, what it does, and what it means to an employee or an employer to actually be in a PEO relationship. We'll also review some top trends that are impacting your firm and your clients. And lastly, we'll go over when to recommend outsourcing solutions and when to think about PEO as a good fit for your prospects and your clients. But before we do that, we always have to clear the air. We have to get through the legal jumbo. So let me read this off to everybody. So this information is the property of ADP. It may not be distributed, reproduced, modified, sold, or used without written permission of ADP. The information is provided as is without any expressed or implied warranty. It's based generally on accepted HR practices and it is advisory in nature. This content provides high-level overview and practical information concerning the subject matter covered. It's provided with the understanding that neither the publisher nor the writers are rendering legal advice or other professional services. Employers are encouraged to consult with their in-house legal counsel or with experienced employment law attorneys for legal advice regarding specific facts concerning the organization's compliance with applicable legislation. Thank you for sitting through that. Again, my name is Greg Usberti. I'm a Senior Director of Deal Strategy here at ADP. And as Gary said, I do solution design for small businesses all the way from 2 or 3 employees up to several hundred. And I work through how they address their challenges and issues as a business, moving through the uncertain, crazy, complex economic and social climates that are going on in the US today. What we're going to cover, we're going to talk about some trends in human capital management to better understand the environment that businesses are operating in. We'll talk about what a professional employer organization or PEO is. We'll talk about the PEO industry at large, what to look for in a good PEO company, what's going to make a good fit, and what to look for in a PEO offering that's going to address your clients or prospects' needs. And then ultimately, what are good fits for a PEO from a business triggers and signals perspective, when you'd want to recommend PEO to your prospects and clients. So to begin, I always like to start to talk about what's going on from a market perspective. I think it's important to provide context about what's going on and why we're here today to talk. One of the most important things to understand is that businesses are really facing 2 broad categories of challenges. So first, there's economic challenges. When we look at things like the Deloitte CEO Index, we see that global uncertainty, stock market movement, inflation, just overall global economy and global uncertainty is driving concern for businesses. There's been record level inflation, even though it's declined, it's still high, and consumer confidence has fallen, as well as supply chain problems, ultimately increasing the cost of goods sold in the US, just creating a lot of economic uncertainty. Even though the economy seems uncertain, the second major challenges businesses are facing today is around labor. So there's been significant wage growth and a shift to an employee-focused market. And that really is creating challenges and friction around talent attraction and retention, and cultural conflicts around a return to work. So when I say return to work, I want to clarify, it's not a return to work, it's a return to work in the office space. And we see it on the news, we hear about it in headlines as CEOs basically have a dividing line with ones that are saying, stay remote, enjoy the work-life flexibility, and one saying that we need to improve culture and move back into an office environment. These are creating friction and challenges for businesses to navigate, and that's where we can help and provide some additional support. So we have our first polling question. Gary, do you want to take that? So what's the biggest business challenges or concerns you're hearing from your clients? So for you to answer that question, I'll give you about 15 seconds or so to answer it, and then I'll move on to the next question. Fantastic. Thank you for participating in the poll. Move on to the next slide. So what is a professional employer organization? Really fully understand what a PEO is. We want to really understand the context of what the traditional employer model is. And the traditional employer model is really focused around the employer acting as the center stack, moving data, information, paperwork through a bunch of series of separate and disparate vendors. So you have a payroll company that needs to share information with 401k providers and workers' comp providers. We have HR that comes into play with payroll and workers' comp. Benefit administration is an entire another existence, another stack that many small businesses have trouble dealing with. Ultimately, this business model is time and labor intensive. It diverts resources in leadership away from core activities like growing the business and strategic movement. And there's significant exposure to liability around having these disparate systems and the data interconnect between these actually being the business owner or the HR person. In a PEO relationship, things are positioned a little bit differently. It leverages what's called a co-employment relationship, in which the PEO contractually shares certain responsibilities with the client company. This allows the company to tap into comprehensive HR outsourcing, manage company resources, employee benefits, regulatory compliance, and payroll. The benefits of a PEO is really that it consolidates vendors to minimize administrative burden. It helps streamline processes to increase efficiency. It integrates systems together to remove errors and mistakes, and it mitigates risk by providing HR support without increasing overhead or administrative HR. Now that's the basics of a PEO. Every PEO should do that from a blocking and tackling perspective. The best PEOs focus on the benefits of human capital management. So when I say human capital management, it's about optimizing productivity and leveraging a relationship with an HCM company. It's about gaining a competitive advantage using top tools and technology. And it's about enriching the lives of employees by going beyond just a Fortune 500 benefit. And when we think about it from a model perspective, it's really about a technology and people bridge that connects the business to individual best-in-class service providers using that wrap functionality around technology and people. So when we think about it, we want to take a second to understand fully what a co-employment relationship is, because it is from a traditional vendor relationship. In this co-employment relationship, the PEO partners with the business and assumes certain employment responsibilities. The client, as employers, continues to have direct control over the day-to-day activities of their business. Meanwhile, the PEO becomes an additional employer of record for purpose of human resource administration. This approach allows your clients to focus on growing their business because they aren't bogged down with all of the HR administration and compliance tasks. And because of the co-employment relationship, your clients have peace of mind that they're working with a partner that is just as much interested in the long-term success of their organization as they do. And that's the fundamental model of a PEO. So what does it look like if we were to draw it out? Well, as you can see, you have the owner or president of the company, and still directly reporting to them is human resources, operations, finance, accounting, marketing, and purchasing. But there's an additional connection to the PEO. And that PEO provides resources that directly support HR and finance and accounting. but also provide additional resources to support the organization with a human resource specialist, with dedicated payroll specialists, with benefits specialists, with risk and safety personnel, and then corporate support staff, ultimately designed to create a lift by giving more resources and more tools to a business so that they can supplement their internal resources with external support. So let's talk about the PEO industry, because for some people this may be new, and for some people the scope of what the PEO industry is has really changed over the last decade or so. So what do we mean when we think about the scope of the PEO industry? Well, first off, 73,000 businesses are on a PEO. 15.3% of all employees with 10 to 99 employees are on a PEO. And those PEOs handle $216 billion of annual wages in 2020. 487 PEOs in the marketplace, obviously a massive expansion in the number of PEOs because of the strength that they provide to their employers. And 7.6% annual compound growth rate for the number of PEO worksite employees. And that's actually 7% higher for businesses that partner with PEOs than the overall growth rate for the US economy. So when a business partners with a PEO, they're more effective at growing and ultimately outperform, and we'll see that they outperform businesses that are not in a partner relationship. So what's the return on investment? We can see companies that join a PEO have 50% lower failure rate and 58% higher growth rate. And this was done through a white paper study in 2019 through the National Association of PEOs, looking at hundreds of companies to figure out what those failure rates were. And there's actually a 26% reduction to total cost of ownership when companies implement a human capital management strategy. So again, by implementing that HCM strategy, businesses help control things like turnover and productivity gaps, and ultimately that returns a better ROI and lowers the operational cost of a business. It's a huge advantage. So what are the results when businesses partner with PEOs? Well, like I said, we see 7 to 9% higher growth compared to non-PEO clients. And then with a quit rate in the national average of about 3%, PEO businesses see 10 to 14% lower turnover rates than non-PEO clients. And when we think about operational efficiencies, PEO clients were actually 119% more likely to have received PPP loans, and they're 91% less likely to have closed because of the pandemic. 98% of PEO's customers would even recommend a PEO. So we can see that folks that are buying into the model, that are using it to leverage the advantages of scale, are enjoying it and recommend it to their peers and their partners. So then when we think about how many employees, how many worksite employees are on a PEO, you should see a really startling fact. It's about 3.7 million employees in the US that are on a PEO, that are in a co-employment relationship. And that's about the same as all of the largest employers as far as US operations are concerned, added up together. That's Amazon, Apple, FedEx, Walmart. Adding them all up is about equal to the number of employees on a PEO. So again, why are more businesses choosing PEO? It's that 2x higher revenue growth, higher employee satisfaction, and its savings on HR administration. And we're going to go in to how that study has shown that these results are so impactful and powerful for businesses. We can also see, when we think about the PEO market, that PEO clients are significantly more likely to feel confident about some key areas of their business. They're more confident when it comes to hiring employees. They're more confident about increasing revenue, and they're more confident about being able to raise funds. And again, we can directly link that to their ability to have resources and partners that we've showed across the entire stack, from HR support to benefit support to risk and safety and compliance tools. So when all of those resources are in place, businesses feel more confident, they feel more capable, and ultimately it generates better results. So on the right, you'll actually see an Inc. article, PEOs, the bounce back partner small businesses need. that sheds light on just how much more PEOs can do to help their small and medium-sized clients, not just in good times, but also when goings get tough. PEOs have been instrumental in helping employers navigate new legislation, compete for the best talent, offer competitive insurance benefits, maintain compliance, and most importantly, take care of their people during uncertain times. Now, on the left, you'll actually see the research conducted by the NAPEO, the National Association of PEOs, which we've shown throughout this entire presentation. And you can actually see that from an experience perspective, 10 to 14% lower employee turnover on average is a huge metric. When we look at that Deloitte CEO survey, and the winter 2022 version actually just came out a couple of days ago, the number one concern when CEOs was polled were labor. It was turnover and attrition in their labor forces. And we can see partnering with a PEO results in lower turnover, which is a huge advantage. So by partnering with a PEO, companies ultimately provide employees access to high quality comprehensive benefits. It helps minimize risk and stay on top of regulations. It minimizes administrative HR tasks and helps them gain HR support without increasing headcount by giving them that support stack to ultimately provide resources for them. That's how PEOs are really effective at driving change when it comes to businesses. So that takes us to our second polling question, and I've been told I need to give everyone more time for polling questions. So this time we'll give you 45 seconds. I apologize for the short first poll. What is the biggest hiring and retention issues you're hearing from your clients? You have about 30 to 45 seconds to throw that into the chat.
And just while we wait on that, Greg, just do want to remind people that they can also put questions into the Q&A box, and should have time to get to some of those at the end.
Again, as Gary said, please put any questions you have, throw them into the chat. We'll probably be able to address them at the end. And if you're thinking of something and have a question, I can guarantee someone else on the call is thinking the same thing and probably has a similar question. So there's plenty of time for the polling question. We're going to move on and start talking about our next topic, what to look for when you're looking for a PEO. So as we can tell, PEO has a really unique and impactful relationship with a business. So what to look for when selecting a PEO can be challenging. And there are hundreds of PEOs to choose from. So when we think about a client, when we think about a partner, we need to make sure that we're doing our due diligence to align the PEO with the client's needs so that we're offering the best solution for them. And there's a lot of things that we need to take into consideration. So when we think about the number of PEOs, the easy way to start separating out the ones that we want to have for our clients or prospects and the ones that we maybe want to put to the side is to think about these 5 areas: financial stability, IRS certifications, the scope of service that the PEO offers, the experience that the PEO has, and the breadth of service that they offer. So let's take each one of these in part and understand what we're talking about. So when we talk about financial stability, we're really thinking about 2 things first. So does the PEO have the financial strength and security to be a good fit for your prospects? So we want to check to make sure that that PEO has been evaluated and audited through the ESAC. That's an independent regulatory organization that does operational, financial, and ethical practices oversight for PEOs. And then you also want to make sure that a PEO that you're selecting to partner with is a member of the National Association of PEOs. That's the National Trade Association of the PEO industry. That's the first sanity check that you've got a good PEO partner. The second thing you want to think about is whether it's an IRS certified PEO. This is another level of support or scrutiny that a PEO goes through to make sure that it is recognized by the IRS. And that recognition process really extends some additional benefits to someone that's going to partner with a PEO. First, it's fiscal ownership. So certified PEOs are solely responsible for the payment of federal employment taxes. If a company utilizes a non-certified PEO that doesn't pay their taxes, they could be liable for the unpaid federal income taxes and penalties associated with that. So fiscal ownership, important. IRS certification guarantees it. Second, required federal standards. So because certified PEOs are solely responsible for the payment of federal employment taxes, they must meet specific requirements regarding tax status, background, experience, business locations, financial reporting, and more. There's a financial guarantee in which the certification program requires a PEO to post a bond each year of up to $1 million, guaranteeing payment of its federal employment tax liabilities. There's tax restart elimination. So that certification eliminates the wage-based restart for certain payroll taxes in the purpose of a PEO relationship when an employer either leaves or joins a PEO. And then there's customer eligibility for tax credits. So certified PEO clients have express authority to continue to claim specific tax credits for which they would qualify for absent of the PEO relationship. So things like work opportunity tax credits or research credits would still be eligible for a group that's on a PEO. And then we think about the scope of operation. What is the PEO going to actually support me with? So we want compliance support with state and local payroll tax and employee issues. We want to make sure that the PEO that we're going to partner with has a broad statewide support with operations in all 50 states and the ability to scale to those. The ability to offer competitive benefits across all markets. And this is essential, especially as we hire employees outside of our local footprint or outside our local jurisdiction. If I'm partnering with a PEO, I want to be able to make sure that, one, the PEO will be able to support that employee in its jurisdiction, but also to continue to offer benefits even across that jurisdiction. We want to make sure a PEO partner is going to be able to quickly assist in entering new markets so that as a business expands and grows, the PEO will be able to support and grow along with them. And then access to on-site HR, risk and safety management training, and on-site training events is also essential. So when we talk about the PEO model, that scope of operations isn't always the same for every PEO. Some are going to have in-person dedicated resources that can actually go out and sit and work with a client and work with a prospect and deal with training. Some will have web-based services, some will have call center-based services. So we want to make sure that when you're partnering with a PEO that they have the right service model to support the business that you're working with. And then the right experience. And this is important when there's hundreds of PEOs to make sure that you really have the right PEO as a partner. And then you have to ask the question, how long has the PEO been in business? What's the PEO known for? Is it known for tech, service, speed? And what does your client need from a needs assessment perspective? What's the average tenure or experience associated with the HR business partner that PEO is going to use? And what does their client acceptance process look like? So what evaluation goes in to decide whether someone's going to be a good fit for a PEO or the PEO is going to be a good fit for them? What do renewal rates for healthcare and administrative costs look like? To understand what the operational costs are associated with it. And how long do average clients stay with that PEO? To understand their attrition or churn rate as far as clients are concerned. And now obviously ask to speak for their current clients, ask for a reference or a referral to a happier client, see what the experience has been like. And that experience is not just through implementation, but through the entire life cycle that they're with on that PEO. And then we think about the breadth of service. And this is important to understand because not all PEOs are going to provide the same service scope, just like they're not always going to provide the same operational scope. So when we think about breadth and service, we can broadly define it into three categories: talent, benefits and compensation, and risk. So from a talent perspective, is the PEO partner helping me with recruitment, associate development, demographics and culture metrics, productivity and engagement? From a benefits and compensation, is it providing me compensation management tools, benefit strategy, benefit administration? Are they helping me with retirement and succession planning as far as finances are concerned? And then from a risk perspective, is the PEO handling employment law, workplace safety, healthcare reform, and workers' compensation claims management? And while these do sound like basic things that every PEO should do, not every PEO does everything on this stack, everything that you see on this slide. So it's important to be critical when evaluating a PEO to make sure it's the right fit for your businesses. So that'll take us to our next polling question. Do you have clients looking to make strategic investments to reduce expenses? Please feel free to answer that in the poll. And as we said before, if you have any questions about anything we're covering, we'll have time at the end to go over those questions. So please feel free to throw them into the chat. You have about 30 to 40 seconds to answer this poll. All right, hopefully everyone took some time to answer that question. And again, throw your questions into the chat so we can talk about them at the end. And let's move on to our next section. What to look for in your PEO offering. So now we know what to evaluate and what areas we want to look at to measure whether it's going to be a good fit or a bad fit for us from a partnering perspective. Now we want to take some time to discuss what PEO offerings look like from an individual perspective and understand which ones are important and what we need to do for the businesses that we're working with. So in a PEO offering, these are the basic areas that a PEO is going to come to play and bring some resources. So obviously benefits and administration, we can help with payroll and tax, workers' compensation and risk management, HR technology, support, talent management, business insights and analytics. So let's talk through each one of these in a little bit and understand what we mean. So when we talk about benefit offerings, Fortune 500 benefits have really become the de rigueur. They're the standard of what's being offered by businesses now. And when we think about it, it's really health, dental, vision, life, long-term disability, maybe STD, 401k, right? These are the basics that should be in every benefit package to be a competitive employer. So when we think about partnering with a PEO and consolidating vendors, what should the PEO be bringing to the table? Things like health savings accounts, flexible spending accounts, state temporary disability insurance, life insurance, accident insurance, health advocacy. When we look at this stack, right, and we think about what we went through with the pandemic, there's been a massive uptick in gap insurance purchase since the pandemic. That's things like AFLAC, accident insurance, critical care insurance. Those insurance programs are often tedious and difficult for a small business to deploy and mean additional vendors and additional integrations with payroll that are oftentimes manual and really not integrated at all. PEOs bring those to the table, and the best PEOs bring those to the table and encourage employee usage for them, because the more benefits that your employees engage with, the less likely they are to turn over. And another important item here is the EAP. We've gone through a stressful time in America over the last couple of years with both social unrest and the pandemic. So things like an EAP have become a differentiator and provide a real benefit to employees that need to be deployed for you to be competitive. Next up, we think about benefit administration. So on a basic side, it's open enrollment, it's new hire enrollment, and it's data entry for payroll deductions. But what does better look like when we're talking about a PEO? Well, it should be consultative benefits. It should be a selection process with a benefit specialist, data, your budgets, and the employer goal, whether it's to grow or to retain, to expand their workforce, hire into new markets, so that the benefits become a useful tool to attract and retain talent. It should have personalized video communication, and there should be support not only for the employer to handle benefits, but for the employees to ask questions about enrollment and to understand their benefits to a higher degree. And then obviously all that healthcare data needs to be captured from a reporting perspective, from a compliance standpoint. So that's another area where a PEO, we have a good and a better option, and we want to make sure that when we're partnering with a PEO and we're recommending them to a client or prospect, that we're going to do the better option. Payroll and taxes, right? On the basic side, every PEO should be due payroll process, wage garnishment. They should have time and attendance tracking, payroll tax preparation, W-2 preparation. That should all be handled by the PEO. What better is going to look like is ultimately management around healthcare. It's going to be management around manager dashboard to get insights and analytics about what's going on with the group. It should have mobile employee apps so that employees have self-service tools. It should have Form 1094 and 1095C completion and filing. And again, it should interface with a general ledger. Ideally, your PEO, when you're thinking about partnering with a PEO, it should have a technology stack that allows it to integrate across a broad spectrum of different tools and resources and not keep you into a walled garden. So when we think about things like time and attendance, there's tons of options available on the market. Many are industry specific. We want to make sure that if we're going to partner with a PEO, that we're going to provide them a PEO that allows them to still use some industry specific tools and provide better integration solutions. And from a workers' compensation and risk management perspective, obviously all the basics: COBRA administration, employer practice liability insurance, healthcare reform, risk reporting and disclosure, safety awareness and training, claims management, and OSHA training. All are things that are going to be the basics of what a PEO should do. And there are PEOs that actually carve out workers' compensation, don't do OSHA training, or don't have claim support and management. But what better looks like is takes all that stuff in the standard stack and then adds on healthcare reform monitoring and analytics to make sure that you're staying in compliance and can anticipate healthcare costs for next year. Access to dedicated risk and safety consultants to advise your business on how to mitigate potential problems when it comes to OSHA or workers' comp. Review and support around OSHA inspections in the event of a safety violation or an investigation. Direct access to workers' comp's claims data. And then above and beyond legal support than just the EPLI that can be purchased on open market. When all of those tools come together, again, we have an idea of what better looks like. From an HR technology perspective, this is a really interesting one because technology is not all the same. So the standard for a PEO is that it's going to be a consolidated HR system of record, or HRIS. It's going to have self-service tools, and those self-service tools are both for the employee to allow them to access tools on their own, just like everyone uses DoorDash and Grubhub because we don't like to talk to people, right? Employees want self-service tools so they don't have to talk to people as well. But also administrative self-service tools. So your HR administration staff, your operations staff, your office managers, whoever's operating a day-to-day HR function role can do more things self-service too and rely less on human interaction to get easy tasks done. Online benefit enrollment, obviously reducing the burden and administration around benefits, streamline payroll entry, reporting, and a manager's dashboard so we understand what's going on. What better looks like, though, when we think about what separates good PEOs from better PEOs, it's time tracking, it's real-time data and analytics and benchmarking, it's talent features like performance and applicant tracking, it's built-in compliance checks, it's fully integrating across the full stack of tasks and features. So I want to take a second to talk about that performance and applicant tracking aspect of it. So it's become incredibly important for businesses to have automation in hiring practices, and then a data flow through from the hiring platform all the way into the human resource information system or the HR platform that they're using. And you want to make sure that you're partnering with a PEO that has the capability of either using a native applicant tracking and performance management platform or the ability to partner with best-in-class single service providers from that perspective. Because that's becoming something that is a must-have when we think about how competitive the labor markets are for many of the businesses that we're working with. And that becomes a real challenge if it's not something that's integrated into the PEO platform. And again, when we think about real-time data and analytics, that's another area where not all PEOs are created equally, where they're not all the same. So when we think about certain PEOs, everyone should have the ability to benchmark data. Everyone should be able to tell you what your overtime rate is or what your labor rates are. The best PEOs are going to use trend data and insights to actually provide you predictive analytics around what you should be doing and provide you with real learning tools to manage the experience for you as an administrator and for your employees. And that leveraging insights and data is going to become a real important part of HR technology as we move forward. Now, support is another area where we want to make sure that we investigate clearly to make sure it's the right fit for our prospects. Support from a specialist on first contact is key. Proven process and templates, right? You want a PEO partner that knows how to resolve these types of problems. Support with tasks to remove administrative burden and updates on regulatory changes are key. What better looks like, and this is the important thing, what does better look like? So it's personalized guidance, not just a template to follow. It's specialized expertise across all HCM areas. It's backup support if main contacts aren't available, and it's acting as a strategic partner. So what does that actually look like when we say, because it sounds great, but what it actually looks like is a meeting with an HR business partner when a company comes onto a PEO in which a strategic service plan would be outlined. And that could be a 6-month, a 12-month, an 18-month, a 24-month plan for that business. It could be rolling out performance management or learning and development. or hiring or opening new markets. So obviously that strategic service plan and that partnership with a PEO is going to help carry that business a lot further than simply reactive support by having an HR person to call. So these are the kind of inspections that you want to do when you're making a recommendation for a PEO partnership for your prospects and clients. And then when it comes to talent, this has become the hot button, right? Like I said in Deloitte, it's the #1 area of concern. Handbooks, job descriptions, background screening. That's the basics of talent, right? That's talent from probably 2010, maybe 2009. Now, when we think about what better looks like, it's really a system to manage applicants, how I hire people. It's a system to judge whether I'm effective once I've hired someone. It's compensation tools to make sure that we're competitive in what we're paying people. It's engagement strategies and surveys so I can ask my employees what's working and what's not working. It's full service recruiters and support in hiring needs. It's retention strategies and programs, learning and development tools for both managers and employees, and leadership development. It's strategic talent strategies, right, that align to business outcomes. And it's interesting, in my job, I actually analyze client data and make recommendations by benchmarking compensation and understanding what's going on. And I let the data tell me a story and see whether that story matches with what the client is experiencing. And I actually worked with a client just last week, and they were paying their employees $2 to $3 less per hour. And they were wondering why they were having higher turnover, lower benefit engagement, and disengaged employees that were underperforming when it came to work, their actual work that they were doing. So just understanding, hey, what am I paying people is not enough. It's about aligning what I'm paying people to what I should be paying people and having that better understanding of what's going on to drive better decisions. Let's talk about business insights and analytics, and that's the perfect segue to this. So the standard is dashboards, the standard is reporting, the standard is compensation analysis. The standard is the ability to log in and just see how many people missed punches today. Log in and see what's my overtime is, right? Log in and see, hey, let's see everyone's birthday because we celebrate birthdays in the office. What does better look like when we think about what we're doing with the PEO? Better is real-time analytics. Better is benchmarking compared to peers in your industry. Better is real-time geo-based insights and trends for managers. Better looks like pay equity explorers with dashboards. So I can log into my platform and pull up data that says what I'm paying employees and whether there's a pay gap between men and women or minorities, and then allow me to get guidance to figure out how I should make corrective action. So again, it's not just about having a reporting platform that we've known and loved when we think about traditional payroll. It's about taking that reporting metric, providing insights and data, and then helping to drive decision-making using AI and machine learning. Just a better way and a smarter way to do business and to scale up what small and medium-sized businesses have from a tool set perspective. And that takes us to the certified PEO. And again, it's really important when we're working with a partnering with a PEO to think about these 5 areas. Is that PEO I'm going to recommend to my client? Do they have an IRS certification? Do they have that fiscal ownership? Do they meet the required federal standards through IRS auditing? Do they have a financial guarantee with the IRS that the tax payments are going to be made? Are they eliminating tax restarts for the client so that they are still going to be able to not have a big tax burden associated with switching platforms during the year? And are the customers going to be eligible for the tax credits that they're getting today? Work opportunity tax credits, women-owned business credits, minority-owned business credits, research credits. Are they still going to be able to get those when they partner with a PEO? And making sure that certification is in place is that extra layer of scrutiny that tells you you're not going to be doing harm to your client by partnering them with that PEO. So we're going to always ask eventually, what is this going to cost? How does this work, right? How do we bill? So most PEOs bill in a burden model, very similar to the way workers' compensation, way taxes are calculated, essentially as an overhead. So when we think about a typical employer, their breakout, right, when we think about what they're spending, is they're spending for gross payroll, then they have tax burdens, state unemployment burdens, workers' compensation burdens, HR, and then there's an opportunity cost. Right? It's the time spent doing HR instead of doing something else. When they look at and move to a PEO model, they're still going to have their gross payroll because they're still paying their employees. They're still going to have taxes and unemployment because those are all the same. But now the PEO is going to handle employee relations, training and development, regulatory compliance, state unemployment, workers' comp. So all of that is rolled into the PEO service fee, the PEO service model. And what most businesses do are comparing what they're paying today in these individual separate vendors to what they'd be paying under an aggregate model. And it's an advantage for businesses because it's billing out the same way that they're billing out workers' compensation now. It's the same way they're understanding their tax burdens now as a percentage of payroll. So that model makes it easy for them to understand what it's costing them to move to a PEO model. And again, these calculations are all done custom for each prospect and client. And for many businesses, the PEO model is going to be either a small investment or actually a small savings, depending on what they're doing today from a workers' comp and benefits perspective. So let's talk about who we'd recommend for a PEO and why. So when I go back and I look at ADP business and I do an analysis of what businesses we're seeing in a PEO pipeline, what businesses are opting to talk to us about PEO, we see some top industries. So business services, physicians, plumbers, HVAC, custom computer programmers, legal services. Ultimately, the strongest fit industries are really going to be businesses that are focused on people forward metrics, where the people are an important part of the business, doctor's offices, real estate, property management, business, accounting, where maintaining top talent and investing in my employees is going to be essentially the key to my success as a business. So those are the types of industries that we play well on. And you'll notice a trend between them. They all tend to have engagement challenges around employees and need to have top talent. They all tend to be benefit-focused businesses in which healthcare, 401k, ancillary benefits are offered to their employees. And for many of them, like plumbing, HVAC, and wholesale manufacturing, they're businesses that have a potential risk exposure from a workers' comp and OSHA. So our best fit businesses fall under those metrics, ones that have high benefit needs, high talent concerns, and again, potential risk or OSHA concerns from a business model perspective. And then when should you recommend a PEO to a client? So anytime you hear a client asking about support managing return to the office or managing knowledge workers, if you've got clients that are telling you that they're unhappy with their current systems, that they're not capable of managing some of the challenges that they're experiencing, if you've got a client that's telling you there's compliance issues or they have challenges around stabilizing their medical or workers' compensation costs, those are all great triggers to think about, hey, maybe I should talk to them about a PEO. And then some discrete triggers, some event-based triggers. Anytime you see an upcoming medical renewal, majority in December or June, they're going to be great fits to go through a PEO evaluation. Anytime you've got upcoming workers' comp renewals or some changes in workers' compensation mod, that's going to be another time that you want to think about PEO as a good fit. And then again, anytime someone's unsatisfied or feels unfulfilled with the tools that they have at play to manage their workforce. Oftentimes I'll hear businesses tell me, I want to do this, but our platform isn't capable of it. Or we want to do this, but currently we're using Excel or Word to manage performance. If you're hearing that from your prospects, that they don't have the tools or resources they need, that makes them a great fit for a PEO model as well. And again, when you're referring your client to a PEO, it's really about that relationship between the employee, the client, and the PEO. And what it's delivering is HR administration relief. It's enhanced employee productivity. It helps manage compliance. It's a single point of contact for challenges for your prospect or client. It's competition. It's being competitive in the labor market. It helps mitigate business risk. And it really provides best practice guidance around HR. That's going to take us to our last polling question. Again, you've got about 30, 40 seconds for this. Do you have clients currently that would benefit from a PEO? And we'll give that a little bit of time. And then I think there's a couple of questions that we'll be able to answer at the end. All right. Hopefully everyone took the time to answer those questions. Let's take a second to talk about what the deliverable would be, and then we'll answer some questions that we've gotten in the chat. So first, if you have a client or prospect that's interested in looking at a PEO model, ADP actually does a benchmark consultation for your clients to help make sure that they're a good fit for the PEO and that a PEO will deliver results for them. And when we talk about a benchmarking exercise for your prospects or clients, we're really benchmarking in these key areas. So from a talent perspective, we're looking at workforce demographics. You're looking at revenue per employee, job growth, time to hire, employee engagement. To better understand what's going on from a talent management perspective, PEO, we benchmark compensation and benefits, average wage, participation rate, contribution to the benefits to provide insights to the client around what they're doing today and where there's opportunity to improve or where they're excelling or beating the market. And then we also do a risk analysis for the business. We look at turnover, we look at SUI rate, workers' compensation mod factors, and we look at turnover by generation and turnover by tenure. Understand what's going on with the business. It's very important to understand it. I feel like I emphasize turnover not enough, but too much. It's important to understand turnover because it's not just a matter of, hey, I'm spending money to hire people and they're not working. It has a broad impact on business outcomes, on cost of labor, on outputs, and it can be turnover in new hires where I'm hiring people and not ever getting them to speed, and it's a revolving door, or it can be turnover that's happening in my tenured employees and I'm not giving them a development opportunity, and ultimately they're not having a career with me, they're having a job. So with that being said, I'm going to answer a couple of questions that I saw in the chat. One of the first ones was, what are the requirements to get certified by the IRS? So to be a certified PEO, there's a couple things you need to do. So first, you have to submit to an audit and regulatory oversight to the IRS. And then you also need to adhere to a set of practices around filing tax payments, and then also submit a bond, a surety bond, because you are responsible for payments of those taxes for your client's behalf. So all of those steps need to go through to be a certified PEO. Now, overall PEO market, every week there's a new PEO. There's probably close to 1,000 of them now, 900. About 400 of them are certified. So a little bit less than half of the PEOs are going to be certified through the IRS. So it's an important metric. One of the first places you go to look at whether a PEO would be a good fit is to look at the IRS list of certified PEOs. Another question we got is, when's the best time to put a PEO in place? First of the year, anytime is better than others. It really depends on the business needs. So if we're at that end of the year period, we're in fourth quarter, doing the first of the year obviously makes for an easy and more seamless transition, and it's a great time to go. But oftentimes businesses are having problems with talent, with turnover, with retention, with education and development. And if that problem is happening in June, it would be a very expensive problem to ignore all the way to January. So depending on business concerns, the model that the business is doing, their expectations to grow, putting a business on a PEO in the middle of the year may make more sense. And again, when you're using a certified PEO that's IRS certified, it's eliminating the tax restarts for the employer. So there's no extra burden necessarily for the employer to switch to a PEO during the middle of the year. So that's another area. So another easy question, what's the minimum amount of number of employees for a PEO? Incredibly small, 4 employees, maybe too small for a PEO. I guess that's the question. Really, PEOs are a great fit for businesses really in the single digits. There's products called PEO Prime. They're small PEOs or small offerings for PEOs just for tiny businesses, all the way up to about 1,000+ employees is really the break-even point where a business should not be on a PEO anymore. 1,000+ is probably getting to that size. So really any size can be a good fit for a PEO. Another question is, how do we accept or reject a client to join a PEO? So that co-employment model, and again, let me reiterate that question. How do you accept or reject a client for a PEO? So because a PEO has a co-employment relationship with a client, there is an underwriting aspect that goes through. And the underwriting aspect is, again, looking at 3 areas. So it's looking at the financial solvency of the company to make sure that they are going to be able to make payroll as well, because if they can't make payroll, the PEO has to make it on their behalf. So there's a credit check associated with it from an underwriting standpoint. Again, because PEOs provide benefits, there's a benefit evaluation and a benefit check to make sure that the business has a sustainable healthcare population. And then finally, because it provides workers' compensation and risk mitigation, there's an evaluation from a risk standpoint to make sure the nature of the business is not too dangerous or too risky to be in a PEO relationship. So when we think about risk, plumbers, HVACs, electricians, those kind of folks, they're going to be in a good risk profile. And you think about miners, coal, underground exposure, military contractors that are out in the Middle East, those are going to be too risky for a PEO relationship. So are there any resources that make it easy to select a PEO by providing analysis of top PEOs? So there's obviously tons of market research. You can go out and look at PEOs. ADP is the largest of the PEOs. We have about 700,000 employees and 14,000 clients. So we're kind of the biggest player in the room, but there's lots of PEOs to evaluate. I would recommend when you're doing a PEO evaluation, comparing PEO to PEO, that you take a look at the technology, understand the support model, understand the tools and tech that's going to be brought to the table, how it's going to support the business, and how ultimately it's going to help the business get to their goals faster. So that's a key area in that analysis. So PEOs are not like normal payroll platforms in which I can go online, I can find out the price and whether it's going to be a good fit. I want to make sure that I have a custom designed solution that's makes sense for my business. So it is more of an evaluation process from a client perspective and a PEO perspective. So what is the minimum number of employees that an employer will financially benefit from hiring a PEO? That's an interesting question. So we've done employers that have 2 or 3 employees, but their benefit load, the offerings that they're doing are very high. So it's advantageous financially for them to be on a PEO. And we've done businesses that are 50 or 100 employees, but the benefit participation is low or the risk profile is low, and it would be an investment to be on a PEO. So again, PEOs are a more custom solution. They're more, I don't want to say bespoke because that's not the right term. They're more custom solutions that are tailored for your business needs. So a solution for a PEO for one business may be a small investment, and that same solution for a business with slightly different metrics, slightly different enrollment data, or slightly different risk profile, that may be a savings. So at the end of the day, whether it makes financial sense for a business really depends on the individual business and the analysis the business is going to go through with the PEO. I think that's it for questions. With that being said, Gary, thank you for having me. Thank you everyone for participating. I'll pass it back to Gary to go over a closing, and thank everyone for the time.
Thanks, Greg. So you've only been doing this 9 years. That's a lot of information to have picked up in 9 years. That's great information. I would have to admit I had a high level understanding of what a PEO is, and you certainly clarified a lot of things. And I think probably the biggest question you guys get must be, what's the right size? That's got to be the #1 question, I would imagine.
It is, and it really depends on the challenges the business is experiencing. So if you've got a small business, 10 people, and they can't find that 11th person, they can't find the director of operations they're looking for, or their director of sales that they're looking for, a PEO may be a great fit to make them more competitive in the business. We worked with, I worked with a restaurant chain, a couple hundred employees, and their challenge was they had some management issues that were driving turnover in certain locations. And for us, they were a great fit, and they chose us as a partner because we were able to address talent challenges for their business that made us a great partner at 400 employees. So where you're going to be a right fit or a bad fit for a PEO is really about where your business is and where your business is in its life cycle and what it's trying to accomplish from a goals perspective.
Yeah, that's great. All right, so I am just before we close out here, I've got two other PDFs that I'm dropping into the chat for people. One is it's an accountant PEO FAQ brochure, so just frequently asked questions for around this topic, and then The other is just, I think it's a comparison of traditional versus like a co-employment or PEO organization. These will also be in the box folder that will be in the link that will, for the link, which will be in the email that you receive tomorrow, that everybody receives just as follow-up to this. So again, Greg, thank you so much for sharing your depth of knowledge here and your wealth of knowledge on this topic. Thank you everyone for spending an hour or so with us this afternoon. And thank you ADP once again for making this possible. Y'all have a great week or a great weekend. It's almost the weekend.
Great weekend.
Very good.
Thank you again, everybody.
Thanks.